All right. So we're live with LinkedIn and Facebook and YouTube. This is Lisa Ford with MGIC.
Good morning.
So we're going to be broadcasting this on our Real Friday show.
I love it.
Live on LinkedIn. And so we also have it through the camera over here, which I need to add to the show. This is how this works. And then this way, as people ask questions or whatever, we can we're totally doing this like off the cuff. This is so yeah. So again, I'm gonna. So we're in Portsmouth, New Hampshire, broadcasting. Jeremy's is gonna dial it live because he's always on Detroit time, although he's in Phoenix, Arizona. And we're just waiting to get things kicked off. Lisa Ford is our hostess, our MC.
MC extraordinaire.
Yeah. So.
We're gonna have some fun today.
Yeah. So this is the first Real Fridays live. So, anyways. No, you're in, right? I wonder if there's static.
That is today. So much. Bring it to life. Yesterday, we're about to start the new session today. And for those of you who just joined us today, welcome.
So that should work, right?
I am the account manager for MGIC, Mortgage Guarantee Insurance Corporation, and the current president of Mortgage Bankers and Brokers Association of New Hampshire. We have several board members here, so if you have any questions about joining our wonderful association and organization, please let me or any of our other members know. For those of you who were here yesterday, you know the housekeeping rules are silence your phones, please. The restrooms are located right around the corner. You can find all the materials in TSM 25. That's at NewHampshireBankers.com, so you just have to use the code TSM 25. And you should have all received an email from Betsy Bolak with that information. And if you need further assistance, you can ask Sandy or Betsy, the two that have been helping all along at the conference. Thank you to Federal Home Loan Bank of Boston for their sponsorship of this morning's breakfast. Thank you. And now I would like to thank our exhibitors who are a big part of this conference. Be sure to visit them throughout the break, sign up for their raffle prizes. Accurate Titles, Susan Contos and Rachel Kunab. New Hampshire Community Loan Fund, Kathleen Paradise, Ron Thompson and Heather Rouse. Guild Mortgage, Martin Baltz. Arch MI, Lou Chinapi and Kevin Keegan. GC Engineering, Mark Fundovitricky. CIC Mortgage Credit, Benjamin DeRucci. Compliance Alliance, Chance Williams and Justin O'Neill. ICE Mortgage Technology, Tom Milligan. And New Hampshire Housing, Andy Catteritt, Anna Godfrey, and Chris Gossel. So thank you. Let's give them a round of applause. So sponsors do play a big part in this conference, and we'd like to thank them all as well. So yesterday's breakfast was Birchwood Credit Services, Austin Wheeler. Lunch yesterday was Dark Matter Technologies, Tina Kistner and Peter Macera. Farm Credit East, ACA, Brandon Gee, Shannon Francis and Justin Clough. M&M Consulting LLC, Elena Weiss. And yesterday's reception was Forbes Mazars, Sean Harms. And again, this morning's breakfast, Federal Home Loan Bank of Boston, Jennifer Cowles, Anna Diaz, Steve Costa, and Shanda Evans. So please join me in giving them all a big thank you. And when you leave today, just a few more housekeeping tips. Please remember to return your name tag to the registration desk. They do reuse those. Also, on your tables, you will see the evaluation forms, paper evaluation forms. Please take the time to evaluate and drop those forms off at the registration desk so that we can have information when we're compiling guests and speakers for next year. Now, it gives me great pleasure to introduce our first speakers. Brock Cassidy is the Chief Revenue Officer at NewZip, and Rick Roque is VP of New Growth at NFM Lending. We're pleased they could join us to talk about the evolving landscape of the mortgage banking industry. So please welcome Brock and Rick.
Testing. Is yours on?
Hello, hello.
I don't think yours is on.
Testing.
Did you turn it on?
Says on.
Yeah.
Okay, good. All right. What we can do is, what we're doing is every Friday, we do what's called the Real Friday podcast. And we get several thousand views every week when we do our podcast on Fridays. And the power of the podcast is, in essence, no marketing fluff. Like we're both very seasoned sort of experts, if you will, as we all are in this business. I've been in the business 25 years. You know, Brock is a really, really prodigy in my view. He's a young guy. How old are you? 30?
32.
You're 32. But he led a lot of innovative technology efforts at Rocket, and he's one of the smartest guys that I know. And as I'm 51, since I outed him at his age.
There's some DEI stuff going on.
Yeah, no. Well, I will say that as I've gotten older in this business, there really is, and many of us, we're looking at all of you, don't judge me, we're all the same age. Okay? And what's amazing is there is a passing of the torch, right? And I started in this business, I probably wasn't much younger than Brock in my mid to late 20s. And I looked up at all of us where we stand today as I grew up in the business. And so now we're in this position of leadership, in this position of, you know, how do I wind down my career? Like, how do I take care of my 7 children? How do I just, over the next 15 years, what am I doing in my retirement? And at the same time, I'm asking myself, what is my mark on the industry as I will leave it? And Brock is in this process and doing it in a really market penetrating job across the country with some technology and some mortgage solutions that he's doing with NewZip. But it does generationally, this is a great balance. And so on Real Fridays, we talk on, very straightforward around what's happening, who's winning, who's losing, what companies that I admire, what companies, let's say, I don't necessarily admire, what market trends I think are working, what market trends are failing clearly. And we try to, whenever we interview vendors or other mortgage professionals or bankers, we really try to really cut through, even potentially interrupting them on what their value proposition is, and are they going to lower costs, and are they going to serve the consumer better? Are they going to make us more compliant? Are they going to slow us down? Are they just going to be an added deadweight cost to our P&L? Like, we really try to push to yield real answers. Thus, Real Fridays. Okay. So what we do is we broadcast. We've never done this before. Whenever we've spoken at conferences, we've never broadcast live. So this is a first. So technology being technology and being a first, and you always remember your first. This may not necessarily go as well as we planned. Okay.
You guys in the room are probably going to get a little better experience than our online listeners,
Yeah.
I'm guessing, but we'll figure it out.
But no, we're in Portsmouth, New Hampshire, and the good news is we'll get several thousand views on this video, right? But this is the Great Vermont, New Hampshire, and Maine Bankers Association Conference, right? And what I love about this is, I think the turnout is excellent, by the way. I think this is wonderful. How many people from Vermont? Oh, sweet. I love it. I just drove down from my cabin in Moortown. I love you guys. This is great. All right. And then how many of you from New Hampshire? Of course, you're going to sit the opposite side of the room. Vermont's over here. And then, of course, Maine is right in between. There we go. Gosh, that is great, Maine. Isn't it so funny? Vermont, we always pick on the people from Maine, growing up, right? And like in Vermont, we're no different. We're just as incestuous. We're just as crazy. We're just as crazy. We love our Subarus, we're just as liberal. We're just as independent. We all own guns as well. I mean, it's crazy. We're such a difficult. New Hampshire's a little easier to pick. Like New Hampshire's a little easier to sort of stereotype. But New Hampshire or Vermont and Maine are almost, I don't know, husband and wife from the same family, I guess, or brother and sister, or however you want to call it. And so what I'll do is what we had decided to do is I was going to introduce Brock, and Brock was going to introduce me. So I'll continue my introduction to Brock, and then Brock will introduce me. Okay. So Brock is Chief Revenue Officer at New Zip. It's a really, really cool technology. And I'm going to butcher this. So this is Rick Rock's version of his technology. I don't work for him.
I can't wait to do the same.
I don't work for him, so I can say whatever I want about your technology. It really sort of ties in a unique and seamless way, like the relationship with the realtor, the consumer, and the mortgage company, right? So oftentimes you might get a pre-qual. You give that pre-qual out to the consumer, to the realtor, and then the realtor says, yeah, that's great. You got it from, Rock Lending or NFM Lending. But, I use this guy over here, right? And so from a mortgage lending standpoint, there are various incentives, and there's a sort of seamless sort of experience to kind of incentivize the consumer to kind of stay within the experience, right? To stay within that sort of connection. And I've met the founder a number of times, but Rock is really single-handedly responsible for growing this company nationwide. And he's done a phenomenal job. Many of us in senior leadership have watched this kid grow in the business and leave his mark. And I'm not being disparaging when I say kid, because it's hard when you're 31, 32, as many of us remember, to have an impact on this industry in your local level, let alone nationwide. And he's really done the trick. So he's a Bowdoin guy from Maine. No, Vermont, Maine. From Maine. And
Maine's over here.
Yeah, up there. Maine's up there. And so he's one of the smartest, insightful technologists that I've sort of come to know and had the pleasure to sort of working with on Real Fridays. So your turn.
All right, thank you, Rick. Rick has done a whole lot of different things. It's really hard to keep track of. I often, and some of you may have already experienced that this morning, he's often doing 2 or 3 things at once, whether it's, he's in the media a lot as an expert that gets quoted by all kinds of different mortgage industry news. He has been retail leader for some of the biggest national retail lenders in the country, as well as some regional lenders. That's where I met him. I met him when he was at New American Funding, and I was working at a startup called Easy Knock that had some new bridge products and some new kind of mortgage alternative products for borrowers with low credit scores. And we did a national partnership there. So that's where Rick and I, called each other every day for a year and did a really complex deal together. And I think that was kind of the jumping off point for us getting to know each other, I would say. But Rick has always done a mix of consulting, media, and true mortgage industry leadership, recruiting, M&A, things like that. So now he's with NFM Lending. They're, it's one of the, I think, shining examples of using new growth strategies with social media, certainly, with recruiting, and seem to be really creating a great place that loan officers want to be across a lot of different markets, which you guys are based in Baltimore, Maryland, right?
Yes.
Yeah. So that's, there's a much further reaching impact than that, which is harder and harder, every day with the retail landscape. So I've been really impressed with Rick and have known him across, I don't know, his last maybe 3 or 4 roles, but I know before that, earlier in his career, he helped co-found, invest in, and operate a number of different tech startups in the space as well. So I think that's kind of a little bit of a kindred spirit thing where both of us have straddled the mortgage and vendor side.
It's crazy. My oldest son is 29 years old, and I look at Brock, and it's so dumb and so strange at the same time. But it's like I look at him, and of course he's older than my oldest son, but it's really surreal to be like kind of friends and sort of colleagues with a guy who's basically my oldest son, which is mind blowing to me. Isn't it weird that like I stood up and started, and Brock just stayed seated?
Maybe after this coffee.
Yeah, no, it's so illustrative of sort of the different personality types. So how many, and this is a unique sort of quality, what we wanted to do is survey you guys, okay? So how many of you are from a traditional bank, a depository? All right. So yeah, I mean, I would say, what would you say that to be about? Almost
70%.
Yeah. Gosh,
Yeah.
that's amazing. I love it. And then how many of you are from IMBs? Where's your guaranteed rate? Somebody's from cross country here. No? Somebody's from NFM's here, right? Me. But anyone from an IMB? A non-depository? Just where are you from?
New res.
Oh, New Res. There we go. Yeah. No, what's his name? The Baron. Yeah, I just spoke to Baron not too long ago. Really
I was at the
intimidatingly
leadership offsite in
yeah.
Las Vegas last week.
He's an intimidatingly smart guy who runs New Res. But nobody else, just one guy from New Res? Is there any brokers here?
I think so.
Any mortgage brokers? But you guys are so timid. Usually brokers are not timid, okay? Like, what is happening? So New Hampshire, what brokerage firm are you with?
Legacy Mortgage.
Legacy, and where are you out of?
Hanover, Hampshire.
Hanover, okay. In Mass, we say Hanover. That's perfect, okay. And how long did you start it as your company?
Yes.
Good for you, man. That's great. What year did you start? 2020. Gosh, it's like, you probably went into it thinking this is the worst time on the planet, and then like 4 months later, you're like, I'm a genius. Like, this is the best time to start a mortgage brokerage firm. Of course it is, honey. Go home to your wife with that one. And that's an issue. We'll talk a little bit about the broker market share because I'm pretty fascinated with that trajectory. And how long have you been in the business? 25 years. Yeah. So are you class of 91 or what year did you graduate? 91. See, I could tell. I could tell. Well, I shaved this morning, but I looked like you when I woke up this morning. So, but, and I mean that in an awesome way, right? But what's interesting is we remember, right, coming out of the mortgage crash in 2008, and the market crash, all together. The broker market share got down to around 8, 9, 10%. I mean, it was abysmal. And I was an executive at Calyx at the time, and so I knew pretty much every mortgage company in the country that had over about 40 or 50 loan officers. Right, about 70% of all loans was going through Calyx's platform. We even had loans going through in like West Africa. It was really weird. South Central America, people doing loans for Africans using point, buying land in the United States. It was crazy. We could track the credit pulls, and we'd be like, there's a credit pull in, Uganda, or Costa Rica. And, but interestingly enough, when that started sort of to fall apart, and then I joined sort of the IMB ranks and focusing on consolidating production around non-depositories, I remember being very gleeful at the destruction of brokers. And it was the late Dave Stevens that became like a real mentor to me, who said, Rick, don't do that. He was on the executive leadership. I don't think he had been elevated yet to chair of the MBA, but he was on his way. And he said, no, we need 3 healthy channels. We need a strong depository. We need a strong mortgage brokerage firm. And this is at a time when everybody was blaming the brokers for everything, right? Wrongfully, right? But he said, Rick, don't do this publicly. Don't do this in writing again. I was doing a lot of writing. We need 3 healthy channels, and we need to help kind of this brother out, this sort of brother wing of the industry. And he was right. We need 3 very strong channels in this business. And so I commend you for being, number 1, a business owner, number 2, a mortgage professional, and number 3, having your own broker shop. And then vendors. How many vendors are here? I mean, I know. Thank you, vendors. So we go 1. All the vendors in the booths. That's great. Guys, this is great.
Louis hiding over there.
Oh, Louis from MJC. There we go. That's great. Or not MJC.
Arch.
Or Arch. I apologize. Hey, we're all family here. Okay. We're all family here. Okay. Yeah.
Lou's gonna take back all the tech equipment he gave us this morning. Get that wrong again.
Exactly. Thank you, Lou, by the way. Thank you for the tech equipment as well as dinner last night and so on. So that was very nice. So one of the questions we wanted to ask you before we got into our prepared points, if you will, We say it that way because we intentionally don't bore you with, not bore you. Some of these presentations can be very content rich. It's just sometimes when you're in a room of 100 and 200 people, it's difficult to throw up some of the industry statistics. Like I have some of these I could have posted, but none of you would have seen this. So it'll be interesting to more talk about it than it is to actually show you. I can certainly email you anything that we sort of speak about today.
And we're looking, as you can tell, for participation. So any
Yeah.
questions along the way, just cut Rick off.
Yeah, thank you. But so what do you feel to be the most pressing confronting your organizations, whether you're a broker or whether you're an IMB at New Res or whether you're a bank? What do you find to be the most pressing in 2025? And then also, let's also look to 2026, right? Because these years go by really fast. And really usually from an executive standpoint, by June, I'm already planning for Q2 of 2026, okay? As probably many of us are. So let's also talk about what we're interested in learning, hearing, and understanding about what the market is doing in 2025 and 2026. Anyone?
Inventory and affordability.
Refi.
So inventory and affordability, refinances, God willing, right? Anything else?
Trigger leads.
Oh, the trigger leads. Yeah, that'll be interesting to see what happens out of the restructuring the CFPB. I know there's a lot to talk about this last week. This has been a little crazy.
Yeah, good time. Plenty of topics right now.
Yeah, no kidding. So trigger leads, refis. What else? Labor? And what specifically about labor?
Finding the next generation of mortgage users.
That's right.
It's that.
That's right.
What's the new administration going to do with the GSEs?
That is a coin toss, isn't it? But I mean, I think we pretty much know where that's heading pretty aggressively. But yeah, we could talk about that for sure. I was just talking to a friend of mine that's was in the prior Trump administration, and he does not have a role in it this time around yet. But we were talking about that very subject. Anything else? And it's really mainly what the implications are on our business, right? Because the GSEs can kind of do what the GCs can do, but how does that translate into underwriting guidelines? How for our underwriters and what do we sell to our consumers based on any and all adjustments there? So, anything else?
About lowering the spread between the 10-year and MBS.
That's another one. Yeah, that's another one. That's another really hot topic for sure. And then how does that, in your planning for your organization, what bank are you with?
Luminate Bank,
Luminate out of
Minneapolis.
Out of Minneapolis. Oh,
Yeah.
That's right. You guys are growing like crazy. Yeah. Yeah, exactly. That's such a Midwest Minnesota kind of like, let's just grow really aggressively, but let's just not talk about it. But no, that's come up on my radar just in some of the research I've done. But it's right in Minneapolis, right, or Edina?
We have branches in Dover and Bedford.
Oh, got it. Okay, there we go. So how's the 10-year spread? How are you not knowing and seeing and wondering what that's going to do? How is that going to translate to your day-to-day
If we
business?
can tighten that spread, we can get lower rates for consumers, which helps affordability.
Mhm. What else? I'm shocked nobody said AI.
Oh, we covered it yesterday.
Yeah. And how many of you feel as though that's more hype than reality? Okay. All right. How many of those feel like there's real material gains to be had in AI? Yeah.
How about both?
Yeah. How many of us just don't know? And then how many of you are actually pursuing AI projects for your organizations, for your banks, for instance, since there's so many depositories here? All right. And what bank are you with, ma'am?
Claremont Savings Bank.
Claremont. Okay. Good for them.
So yeah, so we're already doing bot work. So we have some bots working for
Good.
us in the mortgage area now, doing QC and doing the monotonous work that our loan servicing department was doing at booking. And we have 3 more bots coming this year.
And what are you building those in house? Or are you partnering that
We're
out?
partnering now with a vendor.
What's the vendor?
That one is something bot. I'm trying to get the first name of it. I'll get back to you on that.
Yeah. No, I'm curious because The vendor space is a confusing one when it comes to AI, because there's sort of the marketing of AI, and then there's real AI sort of work being done. And we're going to talk about AI here in
And really
a couple
like
minutes.
client-facing AI versus, the internal operations bots and things like that.
Are you guys using AI and use it? Like, and how are you using it if you are at all?
Yeah. So briefly, just to sort of explain why we're doing it on behalf of our lender partners. What we do is we run a national real estate network. Lenders can either bring in preferred agents they already have relationships with, or use agents that we have relationships with nationally, and communicate with them through our platform. We do all kinds of marketing on their behalf, things like home search, MLS data, market reports, for servicing partners, equity positions, all this kind of stuff. All that to say, we have all these different personas: first-time home buyers that are 6 months from buying, current servicing client of new res that's trying to figure out how much equity they have to go shopping for their next home, because they're having a kid, whatever. So the main use of AI we have right now is to match the detailed personas we have. Right now, maybe we have 10 of them, right? But we want to have thousands of them. Really detailed personas: first-time home buyer in this market with this much, with this credit score. What are the custom steps we need to do? What are the custom steps we need to help the lenders that we're partnered with do? So that looks like showing them different content. That looks like showing them different listings. That looks like showing them different calculators, all in our digital experience. So a lot of what we're doing is that content generation and kind of like persona matching using AI. It used to be, impossible to create content for, Presque Isle, Maine's schools for a national online lender, right? And now it's pretty easy because that data is available, and AI can turn around pretty good, maybe 90-something% accurate descriptions of that, of the schools, the walkability, the listings.
So that's to benefit the consumer and the realtor directly.
Yes, it's
either finding a property for a consumer, or the consumer actually knowing, like, hey, this is, my preferences, GPT, like, where should I be living, and where should I be looking given proximity to work, grocery store, schools, whatever.
Yeah. I mean, in a lot of ways, because everything we do, we're a 100% partnership-based business. All we do is work on behalf of lenders. And so it's all, for example, it'll all be NFM lending branded, right? So really, in a lot of ways, what we're doing is trying to give power back to the lenders that like sites like Zillow and Redfin and Realtor.com often take away. Where then the client goes and finds another realtor who takes them to another lender, and undoes all this hard work and all this relationship building you've already done. So we kind of call that like playing defense, right? The clients or members or depositors that you already have, let's give them everything that they would have gotten from Zillow, plus some more customized data, because you have that, because you're their financial institution. So that's what we're using AI for. It's pretty client facing, it's pretty content driven. We don't, for example, use it under the hood to help us operationally too much yet. We've found that that's not quite there with all the different closing work we have to do across 50 states. But we hope to layer in more of that, just lower the amount of manual work that our team does.
OpenBot.
OpenBot is the vendor you're using? Excellent. And where are they based out of?
They are actually out. They're not in the country. They're outside.
Oh, got it. Okay, got it. Yeah, we like at NFM, we started prior to my tenure there, joining the leadership team. We partnered with a company called Inside.ai, INSYDE.ai. Incredible company based out of Miami, and they have helped us accelerate. I call it the velocity of decision making. Okay, to illustrate the velocity of decision making, I was playing chess the other day with my son, and I decided I beat him the first two games. Third game, I was a little bit, I felt a little bit behind, and so I was like, I wonder what my move should be. I took a screenshot of the chessboard and uploaded it to ChatGPT, and I said, what's the best move? Within obviously a nanosecond, I had like 4 moves ranked based on the probability of success. of winning the game, of not just the initial moves, but the next 2 moves I should do if I did that move, just like that, right? Laid it right there, right? And it was fascinating. All I did was take a thick picture of the chessboard. It analyzed the chessboard, analyzed all the different pieces, my rook, my horse, my bishop, my pawns, and it said, these are the 3 moves you do. And if you do any one of these 3, here's your subscript moves, and here's your following moves, tertiary moves. And these are the probability of success to win if you go down this path. Fascinating. Okay.
So did you beat him?
I did. I did. Thank
That's
you.
what's important.
I did. Yeah, no, yeah, exactly.
But it sounds like
Exactly.
you had to cheat. So.
Yeah.
Well,
He augmented himself.
I was informed, okay? I was looking for an informed decision, and I was informed.
Found the experts.
Hey, I tell my son, like, my generation like built this technology, so I can use it. Go ahead.
How old is your son?
Well, that one is 22.
So for a younger person, you had to use AI.
Correct. Well, I'll take any leg I can get. I can't run fast anymore. I sleep a little bit longer. So yeah, I'll take any sort of leg up that I can, for sure.
Do you not feel bad about that?
I absolutely do not. It's called working smarter, not harder. How about that, right? I mean, that's what we have to do as we get older. We get a little more precise in our movements. Although I do feel like a dinosaur in the woods with all the little dinosaurs running around me as I walk through airports these days. But but AI is all about the velocity of decision making. What Brock was talking about, and I think what we've done in NFM was our loan officers can literally type into kind of an interface and say, like, what are my tasks for today? It pulls it from Outlook. This is what emails are the most pressing, and it goes through 10,000 emails and said, like, well, you didn't follow up with this, or you didn't follow up with that, or yes, you should follow up with this, or you said last week you delivered this report and you didn't. Like it, so it just prioritizes emails based on the conversations and not just based on the chronological receipt of their emails. And you could say, in light of my branch margins and in light of the market rate, who could save more than $200 a month? I've been with the company 10 years. Give me a list of borrowers that I could say. It just comes up with that. And then it'll ask you, do you want to send them a text message or an email with almost like a prequel scenario of like what you could, like what that scenario looks like and how much you can save. You proofread sort of the template, hit yes, and then 600 emails and go out and maybe 500 text messages or something. So it's the velocity of decision-making is so rapid, number one. And number two, I call it sort of the planarization of talent. Because for the first time with AI, we're going to be able to take your top loan officer and the best practices of that top loan officer and using technology, enable the lower performing loan officers to improve and get better. Through either best practice scripts in your outbound calls, through scenario planning, through identifying products and product alignment for the consumer based on the consumer needs. All of a sudden, your smartest loan officer becomes something that you can, in essence, level set the talent across your sales staff, which is going to be especially power. Is there anyone from Leader Bank? I thought Leader Bank was going to be here. Isn't Eric here?
Eric will be here soon.
Oh.
I hear you.
Oh,
I don't think.
okay. Eric's going to take his time coming from Boston. Okay. So, but I'm actually really impressed with what Leader Bank is doing because they're a monster mortgage company for sure as a lender. And I'm just looking at, I don't know any of the personalities there other than Eric, and I really don't know much about the company other than how aggressive they've been in their investments and their growth as an originator. And I know that Eric's using that as a way of level setting his call center for training and script. So it'll automatically listen to 25 loan officer conversations. I mean, I would love to have this. I mean, we have 600 and something loan officers. I'd love to have a tool listening to every single conversation and then providing them coaching feedback on either missed things that the consumer said that they didn't say or respond to, or information they quoted the consumer that was just wrong, right? I would love to have a coaching tool like that, and it maybe send you a transcript of the conversation and automatic tips and feedbacks on how you can improve. I mean, isn't that what we're trying to do?
right?
Yeah, that co-pilot concept is really common in a few other industries already, including like tech sales. That's really common, even for engineers, even for software engineers. Now I've heard that there's some really amazing co-pilot tools where it'll do kind of all the baseline work, and you can edit a little bit versus having to write everything, right? And then for marketing, certainly, which is, like I said, mostly what we're using AI for today is just very, very customized marketing in a way that was impossible to do in the past. But yeah, I think that like co-pilot to the sales process, to the client service process, kind of guiding you, correcting you, training you for maybe junior people, is a really interesting concept as well. I know when I worked at Rocket Mortgage, I left in 2021, so it's kind of early days of the AI conversation. But that's exactly what all the chatbots were trained on. Was there's 3,000 loan officers. What are the top 10 saying? And they all had different styles, so it wasn't always applicable, which was an interesting concept in and of itself. But that was exactly how they were going about it, and I'm sure how they are going about it is looking at the number one person for converting on this metric. Let's have the AI replicate that. So that's and maybe that's different people and different tools are good at different steps in the process, of course, right? So it's not even as simple as copy the best salesperson. It's probably can be a lot better than that.
How many of you, when you reflect on AI, how many of you are uncomfortable with it? Yeah, I mean, in some ways it's very natural and very human to be uncomfortable with new and innovative, whether it's technologies or processes or experiences, and to some degree it should, right? Because it's going to be extremely disruptive. Extremely disruptive. I can't emphasize that enough. I think companies who are not investing in AI, and I think I'm probably the most concerned, I think, probably for depositories, because depositories tend to be a bit laggy, like they tend to lag when it comes to technology. And I think that depositories who invest in technology are really going to separate themselves from the depositories who don't. Okay, and you balance between the regulatory conservatism and you balance between culture. I mean, I was consulting with a bank. I won't name who, but in Massachusetts, and the average age of the average board member was 78 years old. So you talk about AI. I mean, that was but the problem is, it's like the decision making, which generally comes from the board, and to some degree rightfully so, but to some degree it's a bit of a challenge for the boards to try to lead for the future, right? And how are they sort of driving the succession of their leadership to a next generation of leadership that's going to take the bank to the next level. But AI is going to be, there's no question AI is going to enable you to scale. There's no question. I know on our end, we did about $7.5 billion last year. And typically, we all know the math, right? If you add, at least in the non-depository route, if you add X amount of production, you see a loan, an underwriter could do two to three dispositions a day, right? So if you work 20 days, you're dispositioning 40 to 55 loans a month, right? If you have an underwriter, right? I mean, we're planning to scale that to about 15 a day, okay, from 2, through the use of AI and sort of confident sort of reviews and recommendations from the platform. And so that's not necessarily a job elimination, but it's going to be much more of a job sort of more of a cost containment measure, because as we scale, no longer those ratios are going to be the same between your LOAs, your processors, your underwriters, your auditors, your funders, your closers. All that is going to get streamlined without any question in my mind. Like, this is happening right now. We'll probably double the production and only add maybe 15 or 20% of the back office, which was up to this point absolutely prohibited. And from a margin gain standpoint, it's extremely attractive. Yes, sir.
My biggest concern with it is the jobs.
Yeah, oh yeah.
Where's the production going to come from in this?
100%. No, it is. it's gonna put a pinch on a lot of us who are on that tail end of our careers. Because I don't look at myself as old, but I'm also realistic, right? I'm 51. I'm saying to myself, my father had his first heart attack when he was 54. He began to wind down in his 60s. Like I'm very realistic that I probably have maybe 7 or 8 years of a hard push. And after that, just, life requires you to slow down. Right. And so I asked myself the same question, like, where do I put my resources and how do I evolve with the competing constraints and the competing evolutions in the economies around us? Because you're 100% right. People should be asking themselves, not so much in a position of fear where you become paralyzed, but in a position of fear where it puts you into action around what you could do to invest in yourself to be able to compete in 10 years from now, 15 years from now, 20 years from now. Because this isn't one of those things like in 2000 when we talked about hosted and paperless and going, at the time it was all about hosting Citrix and stuff. We're still not paperless, right? We're still not paperless, right? and this is a very real innovation that is going to change the way we look at the mortgage process and the way the consumer looks at qualifying for a mortgage, the way the consumer looks to buy a house, in short order, in like 3 to 4 years. Yes, ma'am. Somebody was it?
Yeah. I guess I look at it from a little different perspective.
Yeah.
I'm with a title insurance underwriter, so I'm not with the banks and stuff, and I teach a lot when it comes to all the cybersecurity and fraud.
Yeah.
So
Oh, yeah.
AI, it's like, I see it, the benefits and stuff of it, like you're talking about, but then I see how much it can lead to even more of that fraud stuff. So I feel like I'm in this funny, I love it, but I hate it because it definitely has its benefits, but the more that becomes available, also the more it becomes available in a negative way.
Oh, yeah.
You still need the human oversight.
100%.
So
Absolutely.
it's like as much as it could in some ways help with the job market of having less people available in the market, people, it could actually help fill some of those needs, but you still have to have that human piece to be able to evaluate that and how it's getting the information. You have to be able to fact check that too, right? That it's actual accurate information that it's putting out.
Yeah. Yeah.
Those are the things that change everything.
Absolutely. Yeah.
I don't know how I don't know how you sleep at night, quite frankly, in title, because with all the, every time you send a wire, you almost have to hold your breath these days. What title insurance company are you with?
I'm with Older Public Title Insurance. I think I'm the only actual title insurance underwriter.
Underwriter. Yeah. Title insurance underwriter. Yeah. So your clients are all the title agents and law firms, like depending on the state or whatever.
Because a lot of them are smaller businesses too. So, it's different than banks that might have a little more of a compliance and oversight and stuff. So we do a lot on the education of fraud with realtors and things like that too. So I teach a lot of that class. And so that's the stuff that kind of freaks me out. But at the same time, I totally see the benefits of it that you guys talk about, but I have this conflicting feeling.
Absolutely.
Of it.
Yeah, a lot of people are gonna probably get it wrong a little bit, right? Or a lot. And so we have a lot to grapple with in terms of what guardrails to put on it, what safety measures to put in as an industry. More for banks probably, IMBs probably, and brokers probably can be slightly more cavalier, I'm guessing, with it from what I've seen. But the market is gonna probably have to punish some people that are getting some of the implementations wrong and some of the new technology.
Well, and how do you regulate it? Who's regulating that stuff too? So what lines that
police.
what things can get put through it? How
Absolutely.
is anyone paying attention to that too?
It's a bit of the Wild West right now, right? When ChatGPT first came out, we had an issue with loan officers literally uploading full, not at FM, at another organization, and we had loan officers literally uploading full applications in just to see what the ChatGPT would say, and they're uploading social security numbers, they're uploading, and it's this was I don't know 3-4 years ago, and it was dude, what are you doing? That's not a private tool. It's called Open AI for a reason, right? But But part of innovation is breaking things. Part of innovation is going to, and pushing the limits is going to make us uncomfortable. And it's going to require oversight, and it's going to require intervention. It's going to require some guardrails that will need to be put on it. But it's definitely sort of here to stay. It's not going away. And I think banning it, the lawyer community, I work with law firms, and they're like, well, you should just sort of ban it within the organization. And it's like, look, that reminds me of when I was 13, Two Live Crew came out with a tape, and my parents thought that they could just take the tape. Remember the cassette tapes? You pull the tape out. They thought that would work, right? And I just went into the garbage, and you take little tape, and you spill it with and I figured out a way. And it didn't play as well, but I still figured out a way to do it, right? And then Two Live just ended up going to Easy E, and then I went into the next thing that I shouldn't have been listening to, that I have no control over these days with my kids. But it's one of those things where I'm much more in the mode as a parent to try to guide and curb than it is to prohibit, because it's really hard to prohibit anything when they get to past the age of 9 or 10.
Yeah, I mean, probably the worst outcome is to have individual loan officers at a bank just logging into their personal chat GPT and doing what Rick was just talking about, right? So, not saying that's happening a lot, but things like that are happening in every industry. There's been tons of examples of it. So yeah, I totally agree that it's the organizations that don't grapple with it may end up the worst off for that reason too. They're letting AI in without any guardrails, by accident.
As far as I'm curious as your thought on just the production volume and rates and that sort of thing. And granted, we could study this. Logan's a good friend of mine at Housing Wire. He's a very, very smart, very talented, very entertaining economist and market analyst. We talk, frequently around where rates are going to go, right? Just talking about the 10-year. And it really is, there's so many complicated factors, and there's no singular causal effect, right? It's not like if the price of eggs go down, all of a sudden the 10-year is going to get better and rates are going to go down. So it's extremely complicated. The inflationary pressures, wage pressures, average household income, confidence of the public, so the futures market, the bond market. I mean, it's a multivariable equation that's really difficult to be like, I got it. Rates are going to go down. We're going to be at 6% to drive refinances. Somebody asked earlier about, I've never thought that we should be, quite frankly, I think a very healthy market traditionally over the last 30 or so years is really between 6.5% to 7.5%. I think to some degree as an economy, that's where we should be, because it gives the Fed some tools and levers. So when economic events do occur, a war in the Middle East or a pipeline that bursts and cost of oil goes up and production goes down, that it gives or a pandemic, right? It gives the Treasury some tools to be able to reduce rates and cut rates. If you're always at 4% and 5%, the closer you get to zero, the harder it is to do anything, right? Let alone what that could do for not just the inflationary pressures, but obviously there's stagflation that tends to follow to be sort of a headwind to that. So my 2 cents worth is, and it's literally 2 cents, but I would say we're going to probably hover through 7%, right? I think these ideas that we're going to get into the high fives, I think are this is Real Fridays, right? Undercapitalized companies who are trying to paint a really rosy picture for their staff and for themselves to prevent themselves to make the changes they necessarily should make. And they're just hoping for that 5.5% or 5.75% or 5.8. It's just, I don't see it. I just simply don't see it. Now with Trump, Trump's a bit of a wild card. Okay. We all know this, right? So it's difficult to say what exactly could happen, whether it's because a lot of stuff that we react to are somewhat causal, they're manufactured, right? Even the most recent trade negotiations between Canada and Mexico, when the market sort of dipped and then it spiked right back up. Well, people think that Wall Street is going to complain when it dips. They don't complain. When it dips, that's a buy, and then when it rebounds, they get rich, right? So a lot of these are investment strategies to drive the market the way the market behaves. Okay. But so I really genuinely don't see, I mean, what's your take on it? I'd be curious. I mean, do you think that we're going to be and again, you very well could believe we're going to be in the low sixes, and there's probably a plausible path for that to happen.
I would like to see the investors that pay SRP to realize that rates are going to be higher for longer, and then maybe they're not so scared of that speed to prepay, and maybe we get to 100, 110 basis points, knowing that we're going to be here and we're not going to have 5% next year and everybody refinances. Because then the economics work better. There's premium pricing, those types of things.
I wonder, so for about every quarter point in rate, it adds another about 400 billion to the mortgage picture, right? We did about 1.8 trillion last year, 1.9 trillion, the forecasts, which have widely ranged over the last 90 days between 2.3 trillion to 2 trillion to 2.1 trillion, depending upon, there's about 5 or 10 different sort of outlets that do these mortgage forecasting. I actually think we're probably going to be closer to probably 2023 numbers I think if we match what we do in 2024 at 1.9, I think we're going to be pretty much par for the course that we're on. I know our January locks, and how was everyone's January? Was it better than last January?
Yes.
Yeah, see, ours was too. So hopefully that's a good sign that we're going to do at least what we did in 2024, but maybe slightly a little bit better, depending upon other market effects. Fair?
Yeah, I think both for the consumers, for all the consumers, which we're those as well as the loan officers, you can start to get used to it, right? And I honestly think that's a huge part of the problem is the sentiment of waiting for rates to drop. Obviously, there's true affordability issues, especially a lot in these 3 states, as far as I can tell. But I also think that a huge portion of it is that things were so affordable, for a minute in 2020, 2021 maybe, or even the early 2010s when I was first getting in the business. Everything was extremely affordable for young people. So I think a lot of the so-called lock-in effect of people are never going to sell. Life events are still going to happen. Relocations are still going to happen. I really think that people will just continue to get used to it. And I think that's, we work with about 40 mortgage lenders across the country, all 50 states. And, almost all of them had a better January than what we saw last year as well. So it's good to hear that you guys are seeing the same. And I think that's a lot of it. It's not really a better environment than last January. It's just getting used to it, marketing a little bit differently, selling a little bit differently, and consumers not waiting another month to see if rates drop to 3, right?
No? Speaking of the lock-in effect, so do you guys see it waning? I mean, are we seeing people, to your point, they're getting used to it? Are we going to start seeing consumers starting to sell because of that? And if they are, and if they're not, what are some strategies that you're seeing in the marketplace that are helping community banks or lenders kind of break the barrier for their potential customers or future customers on that lock-in effect? How are we breaking that?
I do see that since the market is normalizing, I do think investors are getting off the fence and actually buying. I do see sellers are saying, look, if we have to sell, we're going to sell. So I do think that the activity is spinning up just because of the fact that there is becoming a normalized sort of effect.
And recent last 2 weeks of tariff conversations aside, building starts are picking up.
Yeah. And I think the relationship with the loan officer with the consumer is absolutely imperative to kind of say it really doesn't matter. Like at the moment rates go down, we're going to refinance you, right? And so that's why, but you really have to be able to fulfill that promise, not just to get the deal done that you're doing, but to actually have the solution and the awareness and the ability to actually follow up with that consumer to say, you can save a couple $100 here or more based on the market environment. And we're going to refinance you with some special program. We're going to waive the whatever costs to be able to get the deal done. I do think we'll probably, I wouldn't be surprised, and this is a servicer sort of projection, but I wouldn't be surprised if there'll be sort of auto refinances where you just sort of sign sort of in essence, a release almost to say like, if I can save this much money, here's my authorization in advance, here's my signature in advance. You're monitoring my credit already. You can real time verify my deposits, my income, my employment already. You can monitor the market already. Just refinance me already. Don't put that burden on me to be aware enough to call and say, hey, I hear on the newspaper that rates are down. Can I save any money? You tell me if I can save money. That's where AI is going to be really, really smart. And there's going to need to be some regulatory sort of shifts around that to accommodate that kind of flow. But if the regulations are able to sort of change to sort of support that, which is clearly in the consumer's best interest to say like, hey, I'm setting the set point, refinance me and let me know when I'm done. Don't let me know when it starts, time to start the application. Let me know when I'm able to save $300 or whatever it is, right? Because half the time, we don't even know what our credit score is. The average credit score fluctuates about 90 points every 90 days. Experian did a sort of a white paper on how much it fluctuates every time you rack up some debt, you pay it off, you pay your bills, you get some debt, you miss a bill, you pay it off. 90 points every 90 days. So that's 600, 620 FICO credit score consumer. Like I'm educating them that their credit score is doing this and you don't even know it. You just got to be on a dip. And we need to work with you to kind of get you to that 645, 650, 660 or whatever it is to be able to capitalize on a behavior that you don't even know is happening, let alone the loan officer not even knowing that it's happening, right?
Is that due to MSR rights? So when AI churns mortgages?
Oh yeah.
Yeah, investors aren't gonna love that.
Servicers are scary, man. Not scary in a bad way, but there's a serious. We're a servicer, but like a lot of the non-depositories, we sold a lot of our servicing in 2022 to capitalize going into 2023. And thank God that we did. But we're going to sort of building that back up again. But you look at Mr. Cooper and you look at all these large organizations, they have a massive competitive advantage. Now, I say that, but they're terrible at purchase.
Yeah.
These organizations are terrible at purchase, right? Which gives us the strategic advantage, right? So they might have a technology advantage because they have that sort of connected relationship monthly. But I advise a very large servicer in the United States. They're the 5th largest Ginnie Mae servicer in the country. And they're like, Rick, we want to do retail. And they're culturally so bad. Like they're so used to being super controlled. Their loan officers, they literally there's like, here, call these 5,000 consumers and offer them 5 3/4 and it'll save this much money. Like these loan officers don't know how to use a pricing engine. They're really not really professional loan officers. They're just, they pay them like $3,000 a month and $150 a file. Like they're killing it. They, that consumer direct and their servicer on their, it's most 90% refi, but they did 2.8 billion of that.
Yeah.
Right. But they're terrible at purchase. And so now flip the script and get these guys to be consultative to the consumer around purchase. It's going to be a lift. It's a heavy lift, right? But sometimes these mortgage companies, and we're human, right? Sometimes we have a lot of money in the bank, or we have a little bit of money in the bank. We're on a good run. We get a little prideful, and we say we can do this. We can tackle this, and we end up falling on our face, and then we blame everybody else as to why we fell. And the reality was our pride and our ego that got in the way. I see that all the time, especially with banks, right? In my consulting with banks. And it's not just banks, don't get me wrong. I'm just saying, I say that with banks because a lot of you can relate to that in bank environments. But it's really just positions of power. Power and wealth and then success tends to really erode your ability to be humble and to really look at, I can really screw this up, The one thing I like about New England is that about 78% of all mortgages in the country were done by non-depositories. Okay. New England is about 60% depository, especially in Vermont. It's about 60%. I bank at East Rise, used to be New England Federal Credit Union. I also have an account with the Vermont Employees Credit Union, right? But the top ones in Vermont are East Rise, Vermont Mortgage Company, actually. Union Bank, Rocket, of course. Union Bank, nice. Muskoma, Northfield Savings, and SE, North Country Federal Credit Union. And then New Hampshire, the top ones are a bit more, it's about more 50-50, CMG, Rocket, Blue Water. I think Blue Water is a broker. Good for them for being number 3 in the state. then Guild, CCM, Fairway, Movement, and then little old St. Mary's Credit Union. I gotta love those ladies. I love that, you know. Probably my favorite credit union in the country was it used to be in Leominster, Mass. It was called Immaculate Heart of Mary Credit Union. You know, and it just, I'll never forget that. I walked into a meeting there, this was years ago, and I'm pulling into Immaculate Heart of Mary or Immaculate Mary Credit Union, and the woman, this is such a Massachusetts story. The woman coming out was like in a hurry, or maybe I was in a hurry, and she flipped me off coming out, and I said, "Oh my God!" I'm like, I just, you know, it's like coming out of 9 a.m. mass, and like someone's like getting their donut. It's like, but I just love the fire in Immaculate Heart of Mary, and then Maine, there's BSB. What's BSB? Bangor. Yeah, it's Bangor Savings, Camden, CMG's number 3, Guild, Rocket, Kennebec Savings.
Yeah, my family only uses some Shy Savings.
Up in
didn't quite make the list.
Oh yeah, but that's what I love about it. I on a personal note, I bought a place on Cape Cod. This was years ago. I went to Guaranteed Rate. They couldn't do the deal. I went to PRMI. They couldn't do the deal. I went to Cape Cod 5, that's been around for 150 years, and they got the deal. They got the deal done, and they were just, and it was all some Army record from 1890 that was literally tripping up PRMI and Guaranteed Rate. And Cape Cod 5, who was a local lender in that market, totally knows the market well. They said, no, it's fine. We understand this property. That's not true. It's not a condo hotel. It was an officer base. So they just knew the story and they were comfortable with the product. So I became a big believer of banks and the role of banks in mortgage lending to be able to serve a constituency that a lot of lenders just don't or can't serve. The flip side for Mr. Broker here from New Hampshire is that because it's so dominated in New England and banks, it gives you the opportunity to differentiate yourself, to say like, hey, you know, either by choice or by the intimacy. Sometimes with banks, you don't get that personal banking. I mean, I've had bankers say to me, we don't do personal banking anymore. And I'm like, really? This is what banking's all about. It's supposed to be about personal banking, right? But that's just the challenge of institutional frameworks. Whether you're a large mortgage company like NFM, we always challenge ourselves, how do we keep this a personalized experience and not become something where we're so far away and removed from consumers? So I thought that was really interesting as far as the dynamics and the depository dynamics in and throughout New England. What else?
I think we're almost out of time.
Are we out of time? Any questions?
What did you say the name of the podcast is that you do on Fridays?
Real Fridays.
Yeah.
So on LinkedIn, YouTube, what else? Facebook.
We Facebook Live it. Yeah. It's every Friday at 12:30. You can connect with us on LinkedIn. And I will tell you, get on social media, right? I say that, I almost say the older you are, you should be on social media. And I say that because realtors today want to deal with people who know what the hell they're doing. Okay? And a lot of us who've been in the business a long time, it's like the State Farm commercial, right? We've been there, done that, seen a thing or two, done a thing or two. Like, convey that across social media because you will get loans in outside of your market as a result. You will, 100%. Okay? Get used to that. On my LinkedIn page, I touch about 1 million people a year. Greg Scher, my boss, touches about 5 million people a year. So get used to being on LinkedIn or being on social, because I tell you, it will transform your business, your bank, and your practice as you connect with builders, realtors, and consumers, either leaving your market, going somewhere else, or coming into your market, and they happen to find you because they started online.
Do we have any quick questions before we take a little break? Everybody good?
Did you guys like the format, or was it?
Did you guys like that?
Yes.
Yeah, thank you, Lisa.
We're going to take a quick break, 10 minutes. Help yourselves. We'll be back. Thank you.
Sign off.
I know.
All right.
So,
thanks, everyone.
Thanks,
Hopefully
everyone.
The sound came through a little bit. See you guys.
Oh, okay.
All right, cool.